Ever wondered if the day you pay your credit card bill matters? Spoiler alert, it does. In this video, we'll explain exactly how timing your payments can significantly improve your credit score. Today, we're going to explore the fascinating world of credit scores, those three little digits that can feel like a magic number when it comes to your financial health. But what exactly is a credit score? Think of it as a report card for your borrowing habits. It tells the lenders how responsible you are with the debt based on your history of making bills on time. Now, why does that matter? Having a good credit score unlocks a world of financial benefits. We're talking lower interest rates on loans, smoother selling when renting an apartment, and even better insurance rates. Now, most of us know that paying your credit card bill on time is a big plus for your score. But what if I told you that there might be a strategic timing element to consider when making those payments? Let's break down the myth of this magic payment date and explore smart tactics to maximize your credit score. Stick around because by the end of this video, you're going to become a credit card payment pro. All right. So let's talk credit cards. We all know the drill. That dreaded bill arrives with the due date staring us down. We scramble to pay on time, feeling like a good financial citizen that we are. But to truly master your credit card game, we got to peek behind the curtain and understand that billing cycle. See, paying your bill on time is crucial, no question about it. But what if I told you there's a way to potentially supercharge your credit score by being a little bit more strategic with your payments? Now, hold on. There's not like this single magic due date, we'll get to that later, that unlocks financial nirvana, but understanding the billing cycle is essential to say the very least. Think of your billing cycle as a snapshot in time. The picture it paints for the credit bureaus is your credit utilization. It's just a fancy term, basically how much credit you use compared to your limit. The lower this ratio, the better. Now, here's the key. The reporting date is when the credit snapshot is taken. It can be any time during your cycle, but often falls around the statement closing date. Ideally, your credit card balance should be on the low on that specific date. Now, here's the twist. This billing cycle has two other key dates. The first is the statement closing date, like the picture taken date for your credit report. It can be any time during your month, but it often falls around the end of your billing cycle. The second date is the billing due date, which is the absolute last date that you can pay your minimum amount without incurring a late fee. This typically comes a few weeks after the closing date. The key is to have a low balance on that closing date, aka the picture date. So by paying your bill before the closing date, or even better, right after the previous statement closes, you can lower your reported balance and boost your score. You couldn't pay your balance in full by the closing date. No worries. You can still make a strategic payment after the closing date, but before the following statement closes. This way, you can lower the balance reported on the following statement too. Okay, so we know the due date is important, but there's a way to squeeze even more juice out of your credit card payments. Remember, the credit score loves a low credit utilization ratio, which again is how much credit you use compared to your limit. The lower it is, the better your score. Here's the thing. Credit card companies report your balance to the credit bureaus once a month, usually around the time your statement closes. Picture date for your credit health. So if you can strategically pay your bill before that date, or even better, right after the previous statement closes, you can potentially show a lower balance on that snapshot. Boom. Potential credit score boost. Like, let's say your credit limit is around $1,000 and your statement is closing around the 25th of each month. On the 20th, your balance is creeping up to $700. Yikes. By making a payment before the 25th, you can bring that balance down to, let's just say, $300. That's a 30% utilization ratio, which is way better than 70% in the eyes of your credit score. Now, hold on a sec. Here's a twist. Having a zero balance reported every month might actually hurt your score a little. Think of it like this. If you never use your credit card, how can the credit bureaus know you're responsible for it? So a good strategy might be to avoid paying the full balance every single time. Or you could pay it down a few days before the closing date, so there's still room for a few purchases to appear on the next statement date. Another cool trick is make multiple payments throughout the month. Think of it like keeping your credit card on a diet. Little by little, you keep that balance nice and low. Then this way, even if you have a big purchase coming up, you won't accidentally whoosh past that 30% utilization zone. So just pay a little when you get paid, throw some extra cash at it if you have some, and watch your credit score smile. All right, so there's this thing called 15 by 3 rule. So we've been talking a lot about strategic timing for your credit card payments to boost your credit score potentially. There's this thing out there called the 15 by 3 rule. Sounds fancy, right? So basically the idea is to split your payments in two chunks. One chunk, about half of your balance, gets paid 15 days before the due date. And then 3 days before the due date, you throw in the rest. Now the goal is to keep your credit utilization ratio looking nice and low throughout the month. Now, this sounds pretty strategic, but is it really a magic bullet we've been all searching for? Well, not quite. Here's the thing. As long as you pay your bill in full by the due date, it typically doesn't matter how many payments you make. Those credit bureaus usually only see the snapshot of your balance around the closing date. So if you can swing it, making one big payment before the closing date might be just as effective and actually less work. Now, that said, the 15 by 3 rule is helpful if you forget about payments or keep spending in check throughout the month. Think of it like a mini budgeting system for your credit card. Plus, if you have a particularly high balance and want to show a downward trend to the credit bureaus, then the 15 by 3 approach could be a good strategy. But always remember, the key is to pay your bill in full by the due date. So whether you go by 15 by 3 or full-on payment ninja before the closing date, just make sure you take care of that balance responsibly, okay? We've been talking about timing payments for your credit score, but guess what? Paying early also saves cash. Credit card itch is like a sneaky gremlin growing. The longer you carry your balance, the sooner you pay, the less that gremlin has to feast on your hard-earned money. Lowering your average daily balances can slash those interest rates. So timing your payments for your score is cool and all, but remember, the early bird gets the lower interest rate too. All right, hold on a sec. We've been talking about early payments and all that jazz, but here's the thing. If you're a credit card master, you pay your bill in full every month. Keep your spending nice and low, and then rushing to pay might not be the ultimate strategy. Think about it like this. Why give your hard-earned cash early when you can hold on to it and make it work for a little longer? As long as you're responsible and pay that bill by the due date, there is no penalty for waiting. That extra time could be a bit more interest earned in your savings account or just a bit more wiggle room in your budget for that week. Now, this doesn't mean early payments are a bad thing. It just means if you are a financially responsible cardholder, waiting strategically can give you just a little extra financial flexibility. So you don't have to feel pressure to be the first one in line to pay your credit card bill. Just make sure you get there on time. All right, guys, don't forget to subscribe. Smash that like button. That's my time. My name is Toby Rosario. Peace.